Don't know what I do. I trade gaps. My name is Melissa Armo. I own the stock Swoosh, and I've been trading now for 17 years. It's hard to believe 17 years is a long time. But time goes very quickly when you love what you do. So today we're going to talk about how you can earn $20,000 a month trading 30 minutes a day. Fast trades, which I like to do, and as I said earlier, it is fall. It is a great time to trade. There's a lot of momentum, volume. Not only do we have the Fed meeting tomorrow, we also have a lot of other economic data that's coming up in the next week. And then, of course, we have earnings season, which is going to begin in about 3 weeks, okay? So when you have a lot of activity, when you have a lot of volume in stocks, you have a lot of playthrough. If you get the direction correct, if you get the right pick, okay, then you can make money. And again, for me, I personally like to focus on trading in the morning, the fast trades, the quick trades, which we will also talk about as well. If you have questions, you can email me at melissa@thestockswoosh.com. You can follow me on X, Facebook. You can call me at 929-3200-GAP. You can also follow me on YouTube. Again, I've been trading now since 2008, which is so, it's just hard to believe. Time goes so fast, and before we know it, it's going to be 2026. Actually, this is just how fast time is going. But as I said, I know some people signed in late, that's fine, we've already started. I get this question all the time. I have this much money, how much should I risk? How much money do I need? Should I do options? Should I do day trades? How am I going to get the most bang for my buck? And then, of course, a lot of people that come to me that have traded before, they've lost money, they haven't made money in the market, and then they say, how can I do it? If I've never been successful, how am I finally going to make it happen, Melissa? And I get this question all the time. Is $20,000 a month possible? When you break it down per day, now just listen to me. When you break it down per day, per week, per month, you can chunk it out, then it becomes possible. I think a lot of times when people start to trade, say they trade for a year, 6 months, whatever, they just start, pay for a class or two or a subscription, and they start losing, then all of a sudden, all they can think about, people almost become obsessed about trying to make it back, whatever they lost in the market. There is no making it back. You can't go back. There's only going forward, okay? That's it. That's all you can do. As soon as you get on the right path, as soon as you learn a strategy that works, you can make more than $20,000 a month. It all has to do with your risk, and it has to do with whatever system you're using that has more winners than losers, because you're not going to make money trading, even if you have a humongous risk, if you have more losers than winners, all right? So you have to have consistency in the risk, which we'll talk about today. And again, the possibility is endless for how much you can make. It's the idea and philosophy that, yes, you can do it. Yes, this is real. Yes, this is something that you can use to support you or for part-time income if that's what you want to do. And again, I say chunk it out because when you break it down to per day, per week, it becomes much more viable for people. Sometimes people just get overwhelmed. But just think about it. $1,000 a day, which would mean what? Say you shorted 1,000 shares and got a dollar move, or 2,000 shares and got a 50-cent move every day, 5 days a week. That's $5,000 a week. Some trades you'd make a little bit more, some you'd lose, but that would be $260 a year, which is obviously more than $20,000 a month. What if you made $500 a day? Again, break it down. That's $2,500 a week. That's not bad. That's really not bad at all for just working a half an hour a day. What about $300 a day? That's $1,500 a week. Do you know how many traders are not making $1,500 a week? They're not. They're losing, okay? And what if you were risking and then making $150 a day? You say, oh, that's not enough to live on. No, but it's extra money. And if you're doing that for the first month, for the first 3 months, for the first 6 months, then fast forward a year from now, you'll be making $20,000 a month. You'll be making more. So to be able to make $39,000 a year, which was this example I'm using, which is $750 a week, okay? Again, this is very, very doable. You don't even have to risk big size. But in order to make $39,000 a year extra income working part-time hours, that's really good. There are people that work at Starbucks across the street that aren't making that. And then when you think about it, to be able to make 20 grand a month or 6 figures a year, the sky's the limit once you grow your account. And again, my point is, once you break it down, it becomes something then that you can wrap your head around, even if you were losing in the past. But if you go hog wild, okay, and don't think about what you're doing, because you're upset because you took trades and you lost, or this thing, that thing, the other thing, you're just going to fall flat on your face, and you're going to end up taking 1 step forward, 10 steps back. The idea is to take 10 steps forward, 1 step back, and then you get where you need to be. And again, I keep using this when I say chunk it out, because that is the way to do it. You need to chunk it out and set your goals per day, per week, per month. Then you can wrap your head around it, getting somewhere with it. And this is not an exact science. You don't have to put a date on it. You can just say, okay, I'm going to risk this much money between this much and this much and this much by this date, and then I'll reevaluate my risk. I'll reevaluate my goals. I'll see where my account size is at. Do I want to maybe risk more? Do I want to risk less? Okay. Any questions here so far? Again, does everybody know how to chat? Guy Smiley, you're the only one that I saw chatting. You have to click the new chat button at the top, choose my name, and type. Okay, Guy Smiley said, everybody, if you want to chat, you have to click new chat, choose my name, and then type. All right, I didn't know that. I didn't know that. If anybody wants to chat, I guess that's the steps. I wasn't aware of that. Thank you, Guy Smiley. So anyways, getting back to what I was saying, you can do this as a full-time career if you want. Now, when I started trading, again, I was doing mortgages and I wanted to get out of that. I wanted to do something new. I wanted to transition. Again, it was one of these things where I didn't know how long it was going to take me to make the money I wanted to make to supplement and transition completely out of my mortgage job. But it took a long time because it took me 3 years to figure out my system. You don't have to wait 3 years. You can come and learn my system in a weekend. And there are many people that want to trade, that some people want to do day trades, some people want to do options. It doesn't matter what type of trade you do, as long as you are making the right pick and getting the direction right and setting your risk accordingly, okay? So again, options is something we'll talk about more towards the end. I'm usually holding my options trades for longer, okay? But the nice thing about trading is you can do it from home. You can do it from anywhere in the world. A lot of people all over the world want to trade the U.S. stock market because of the volume, volatility, and momentum that comes into the market. Again, we have a Fed meeting tomorrow. Well, it started today, but the meeting is tomorrow, where he will announce what the rate cut's going to be. Everyone knows there's going to be a rate cut. It's how big, how much of a cut is it going to be. But again, there's a lot of convenience to making money from home and sitting at a computer and doing it. But this isn't a computer game. You have to take it seriously like you're running a business. And you have to take it seriously with the money that you're risking, because you want to take that money and you want to amplify it, okay? You want to make more with it. You don't want to just take risk for the sake of risk's sake, okay? But like I said, you could do it from anywhere in the world, and it only takes a few hours a week, which is great. I happen to live in New York, for those of you, some of you know that, some of you may not. But it's not like years and years and years ago where you had to work at one of the exchanges like the Chicago Stock Exchange or the New York Stock Exchange. I could live anywhere. I choose to live in New York. I love New York, but it's very convenient for people because you could live, in a completely different time zone even and trade the U.S. stock market. So I start trading at 9:30 in the morning. The room opens at 9 a.m. We trade between 9:30 and 10. That is the most profitable time to trade in that morning period, okay? Yes, so any questions, you have to go up to, I guess I didn't know this, you go to new chat. Must be a new feature with Zoom. You go to new chat at the top in the chat box, then you choose my name, Melissa Armo, and then you type in a question. That's how you do it. Or you can email me if you have a question as we're going along here or at the end. That's fine. So again, how can you make money trading? How can you make a living doing this? How can you make $20,000 a month or more? Maybe you want to risk a lot less, okay? I'm saying an average of $1,000 per trade. Maybe you don't want to risk that. Maybe you want to risk a set, like I said, 500 or even 150, something small, depending on the size of your account. you can get to the point where you're risking more as you go along. And during that process, you will also be going through the learning process, and you'll be learning the skill set to actually do this. All right. But I found that a lot of people, again, who are trading are just not honed in enough. They're not specific enough about what they're doing. They're going out in the middle of the ocean on a boat, and they haven't charted their course. They have no idea where they're going. They didn't look at the weather. They don't know how they're getting back. They don't know anything. Okay? They're just like, well, we're going to go for a boat ride. No, you can't be like that when you're risking money, because there's so many people out there that are trading. There's so much volume, like I said, in the market. There's a lot of traders, a lot of big traders, a lot of small traders, a lot of retail traders nowadays. They all want your money. So if you are very, 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 very careful about the trades that you're taking, very specific, okay, very honed in, very focused, you can get chewed up and spit out. And then people end up, like I said, losing, getting a negative attitude about the market and stocks, and there's no reason to feel that way. You have to just be more specific about what you're doing. So for me, I decided to focus on shorting. So shorting, and the concept of shorting is really what I ended up wrapping my head around, because when I first started trading, it was the first 6 months actually, it didn't take me long. I did a trade, I made a lot of money doing a short, and I had very little size. I had a couple hundred shares. And I made over $1,000, and I said, this is it. One, it was in a gap, and two, it was in a short. And then I also started researching and realizing there really wasn't that much information out there about shorting. People didn't talk about it that much. And then I also realized, just from personal experience trading, that a lot of stuff out there about shorting was wrong, okay? It wasn't helpful. It was actually erroneous, bad, was the opposite, or not good information, okay, or not thorough. So I decided I really want to jump into this and get into shorting and the concept of shorting. And interestingly enough, I've been focusing, like I said, on shorting since I started. I do go long. Okay, we did some longs. We went long Oracle this week, and Tesla too. But I do prefer to short, okay? And I found that shorting not only gives me an edge, because most traders don't know how to short or don't go to the short side first, but also it's easy to find shorts. It's a lot easier actually than to find longs. Now, while the market has been trending up and making new highs, you could say, well, it has been easy to find longs, Melissa. Well, that's because the stocks have been rallying just with the market. When that ends, which could end tomorrow, or maybe ended even today, then it's not going to be like that. It's not going to be that easy. Okay, if it was that easy just to buy every support level or every pullback, or just trade with the market trend, no one would ever lose money. So that's just not true. So again, it's a lot more difficult to short, or to go long, I should say, in a bearish market versus shorting in a bullish market. So yes, I go long, but I prefer to short, and this is where I've gotten so specific in what I'm doing, because I find that playing to the short side is very beneficial regardless of the market trend. Regardless of the market trend. So again, I've traded in all kinds of markets because I've been trading for a long time now, bullish and bearish, and I'm still shorting, okay? Here's a good example. Okay, I'm just going to go back. I'm going to go back like a month or two. AMD. Okay, this is a daily chart here of AMD. Stock gapped down here. This was August, okay? So stock was right here. Again, I don't remember the reason for the gap. It doesn't even matter. Actually, I think it was with the market. So this was around 176 and change. So it's closed here, gap down. So again, what is a gap? A gap is the difference between the close and the open. So every day the U.S. stock market closes at 4 o'clock, and every day it opens at 9:30. So you have bearish gaps and you have bullish gaps. Here's a bullish gap up here, okay? So this is a bullish gap in AMD. This is a bearish gap in AMD. Different days, different dates. But in this case here, you could have shorted it. You could have done a put. You could have shorted the stock. Could have got in, got out very, very quickly. But I also want to show you the power of shorting and the power of the gap, because look at where this was. Okay, this was August 19th. And this is the day of the gap, okay? And just look at today, okay? This is just, or yesterday, that was around 160. So it fell all the way down at one point. It really fell straight down, actually. Broke 150. Like literally down in here to the 8th. Now again, I didn't look where this closed today, but this was yesterday's. It's still down from there a month later, even since originally. So again, shorting is very, very powerful, and you can day trade shorts, you can do swing trades in shorts, you can do options. Now we're talking about fast trades today because I really like to do the fast trades in the trading room where I'm shorting the shares. And we did a bunch of trades in AMD, but I'm just showing you here the power of shorting. And again, all of this was happening when the market was screaming to new highs. And it didn't matter, okay? So again, this is the market. I didn't see where we closed today, but this is where we were earlier, around Q1. Here's what the market's been doing all week. Up, 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 up. And yet, you can still short. You can still short. You can short in a bullish market. And guess what? You can short in a bearish market. So I'm squished this here. This is the QQQ, same chart, but I went back to the beginning of the year. Here we are, December. Remember, we ran up after the election, December, January, then we fell off the cliff. Again, look at the gaps here in the market. I know these are small bars, but I just wanted to show you all this. This was a monster sell-off where we turned, again, February, March, and April into the beginning of April. So if you were going long here, you lost. Hands down, you lost, okay? And again, there was some beautiful, beautiful gaps here that we were in short. Again, I know these bars are small, but this is a close here on this day of the QQQs. Gap down here, dropped. Closed here, gap down here, fell off a cliff. That was the end of March, beginning of April. Okay? So in a bullish market, you can make money shorting. In a bearish market, you can make money shorting. Again, people have to be more specific with the quality of their trades. And this is, again, one of the points I'm making. In order to make $20,000 a month, $10,000 a month, $50,000 a month, I don't care, $100 a day. You have to be specific with what you're doing. You're just not going to make it if you are not consistent and specific with your picks, because eventually you're going to take the wrong side of things. Any questions here? Again, I just realized some people came in late. For some reason, there must be a new feature in Zoom that there's a new chat window up at the top. You have to click the new chat then you have to choose my name, Melissa Armo, to chat me. I don't know if anybody wants to try that. I see one guy did it, but if you want to ask me a question, that's what you have to do. If anybody has any questions, or you can just email me at melissa@thestockswoosh.com. I don't want to ignore anyone's questions. I just know that for some reason you have to use the new chat box at the top. Okay, getting back to what I was saying, shorting and making money trading. Okay, stocks move very quickly to the downside. That's the other reason I like to short. Again, AMD is a good example of that. But my point being about trading, relying on this as some kind of income, whether it's part-time or full-time, or maybe just for savings for the future, you must have a focus. One individual can trade the market successfully as a career with a dependable method. In order to reap the rewards that the market has to offer, you need a quality system to follow. The central structure to trading results must be a strategy with a solid foundation that is based on accurately reading price action. Again, this is what I do, okay? The other powerful factor in being consistently profitable is having an edge. Shorting gives me an edge, and it will give you an edge too, and for lots and lots of reasons. Again, many people don't know how to short, and many people don't even want to touch shorting. And yet it happens, and then you also have the edge because you can do it in any type of market. Many traders don't know how to short or won't. And even the ones that do stink at it. They just stink at it. They're just not good at it, to be honest with you. So again, who shorts? You say, well, what is a short? I don't understand. Some insiders indicate that it takes a certain type of person to short stocks. It's just a way to take the trade. Again, it's like you're betting that the stock price is going to drop. Doesn't mean you're a bad person. Things go up, things go down. Many short sellers have been depicted as pessimists who are rooting for a company's failure, but they've also been described as disciplined and confident in their judgment. Again, you could say, well, we're not a hedge fund here. We're not a large institution. We're a day trader, okay? You say, well, lots and lots of people, though, that are hedge funds and sophisticated investors and traders are shorting. And you can say, well, they're betting on the failure of a company. I mean, again, this is an open market. This is an open market, and we are doing this for the purpose of making money. And sometimes it's not necessarily betting that something's going to fail. It's just that you're looking at the price action on the chart and you're predicting it's going to go lower, and maybe it goes lower for a day or two or a week or 2 weeks. Doesn't necessarily mean that the company's going out of business. I do see a chat from Michael. Okay, somebody else figured out how to chat. Are shorts just stocks or are they put options? I do both. A put is a short. Basically, if you buy a put and sell it, which is how I'm entering a trade, like for example the AMD, you could buy a put in AMD and then sell it to exit it, which is what I did. That is a short. Just like if you shorted AMD and shorted 1,000 shares of it and it dropped, you would exit it and you can press buy or buy to cover in your platform, but that is a trade where you would have to have the ability to take a margin trade. I do both. So short selling is the selling of a stock that the seller doesn't own. Remember, we're active traders, we're day traders. This is something you have to set up the type account with your broker. More specifically, a short sale is a sale of a security that isn't owned by the seller, but that is promised to be delivered. It's you're borrowing it. I'm just going to borrow this for an hour, and then I'm going to give it back to you. Again, the broker processes all the trades through the clearinghouse. That may sound confusing, but it's actually a very simple concept. So when you short sell a stock, your broker will lend it to you. So you have to have an account at a broker to do this, or trade at all. The stock will come from the brokerage's own inventory, from another one of the firm's customers, or from another brokerage firm, unless it's something weird, which we really aren't doing any weird names that we wouldn't be able to get. The shares are sold and the proceeds are credited to your account. Sooner or later, you must close the short, which we do very quickly. Again, if I'm doing a margin trade, if I'm doing a short, if I'm shorting shares, I'm out of that and flat before 4 o'clock. I don't hold margin trades overnight, okay? So sooner or later, you must close the short by buying back the same number of shares, called covering. Like I said, you press it, buy to cover, and returning them to your broker. If the price drops, you can buy back the stock at the lower price and then make the profit up the difference. Simple. So if you short something at $10 and it drops to $9, boom, you make $1. $1 times what? Whatever number of shares you took. So if you took 500 shares, you make what? 500 bucks. If the price of the stock rises, you have to buy it back at the higher price and you lose. Again, when I day trade, I put in a stop. Okay, I put in a stop. So here's the AMD, for example. Just using an example here. If you shorted this here, stock closed here, gap down. This was a gap. This was on the 5th of September here. Just looking at the bar, it was pretty big and pretty fat. Fell all the way down, broke 150. Let's say you shorted it at 156 and got out at 150. That's $6. That's pretty big. Again, you get big moves with shorts. So again, $6 times 100 shares is $600. And 100 shares isn't a big position. Okay? What if you had 500 shares? You would have made $3,000. And that was a real live trade that you could have done, and you could have shorted the stock. Again, this is a margin trade. You would need a margin account to do it, whether it's on 2 to 1, 4 to 1. I know there's prop places out there that are offering more than that. You have to look into that yourself. But a normal retail brokerage will offer, or should offer, 4 to 1. So what happens in shorts, though? Like you say, well, I don't understand it. I don't get it. I don't get what's happening. It's fear and panic. That's the most important thing that you need to know. And this is something that is almost like if I was trying to explain it, it's almost out of control. Now, again, I was talking about the Fed. Okay, so the Fed has a meeting today and tomorrow, but they're going to have the 2 o'clock meeting tomorrow where they're going to talk. Jerome Powell's going to talk. Let's say he says something, whatever he wants to say. I don't even know what he's going to say. But let's say he says something that spooks the market. The market will sell off like a banshee. That could happen. Now, also the market could rally, could continue up, could make new highs. But I'm telling you, if he says something that the market doesn't like, or if he doesn't lower rates enough, or if he says something that's going to indicate that they're really not on board with dropping rates a lot between now and the end of the year, which everybody thinks that they should be and that they are going to, okay? again, the market could absolutely panic because it's sort of being built into the market rally, which is one of the reasons we've been continuing up and up and making new highs, is that everybody's convinced that the Fed's going to drop rates a half a point, 2 points between now and the end of the year. If Powell indicates something other than that tomorrow, the market is going to go into panic USA mode. Do you understand? And so, what are you going to do? You're going to go long that panic? You're going to go long it? Because that doesn't really make any sense. So again, the point I'm trying to make is that you have to learn how to short. If this is not in your vocabulary, if this is not in your genre of trading, if you're like, I never short, I hardly do it, I do it like once a year, I'm afraid when I do it, I never make money doing it, you can learn how to do it from me. And you need to know how to do this, is my point. Because again, under any market conditions you can short, bullish or bearish. Not really necessarily as fruitful when things are turning to the downside. I'm not saying you can't make money going long in a bearish market. I'm not saying that. I'm saying it's harder than shorting in a bullish market. Fact. And I'm saying this from 17 years of experience trading, okay? And living through many, many different market conditions, okay? Now, I'm not making any predictions about tomorrow's outcome or reaction or even where the market trend is by January 1. Okay, I'm not doing leaps. Leaps are long-term options. I'm doing weekly options that expire on a Friday. Okay, I'm an active trader, and if you come and trade with me, you can be an active trader. But for those of you that haven't shorted, you're scared to short, we're not holding shorts forever and ever and ever and ever and ever and ever and ever. It doesn't matter. You can short an uptrend. It's not going to kill you. You're in and out of it for 5 minutes, 10 minutes, 15 minutes. You're in and out of it in a put in a day or a week. Okay? Anyways, panic sets in very quickly and fast. And that allows you the opportunity to make a lot of money quickly, which is, of course, we'd all love to do that. If I said you could make $5 grand in 5 minutes or $5 grand in a month, what would you say? You'd say, oh, 5 minutes, because I can spend the next month then doing whatever else I want to do, taking more trades, using that money in the one trade to do other trades, instead of being stuck in one trade waiting for it to go for a whole month. So fast is better, and that's why I like to trade fast, because I'm turning my money over a lot. In, out, Monday, Tuesday, Wednesday, Thursday, Friday. I can turn the same amount of money over and over and over and over and over again versus being stuck in a swing trade or stuck in a long-term option that I'm just stuck in and I can't get out of, or I could get out of with a little bit, but I'm waiting. You know, when you get out of a trade, not only do you get out with profit, you get out then with the money that you used to take the trade. So say you risk $1,000. That $1,000 that you have at risk in the options trade, for example, just making up an example, say you're up $500. That's 50%. That's a good trade. You get out, guess what? You get up tomorrow morning, $1,500 is back in your account to use to take another trade. Not just the 500 that you made on the 1,000, the 1,000's back there too, to use again to reactivate to take another trade. Do you follow what I'm saying? So again, that is, again, the process of going over and being an active trader where you're actually taking trades and turning your money over is good. And again, getting back to the whole panic thing where it sets in fast, it's one of these things where I've just become an expert at trading shorts. If you really, 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 really want to do well, you have to have a focus. So that's number one and my point. But becoming an expert really is something that is exciting because you can take advantage of what you see in a way that most people can't. And again, that's exciting too, okay? Now, again, what is a short? Here's Dell. We did this a couple times. Stock closed here, gap down, open, dropped. Again, I focus on gaps. Dell closed up here. Again, this was back at the end of August. Closed up here around 133 and change. Gap down here around 123 and change. Open, drop. You could have bought a put. You could have shorted it as a day trade. And then it fell. Damn. It fell down here for 2 days in a row, broke 120, came all the way down to 117 and change. It's a nice move. So for example, and I'm just using an example here, again, we did a couple trades in this. Again, what is a short? If Dow is trading at 122 and it drops under 122, okay, which this did, then the only way to make money in the stock is to short it. You're betting that the stock will go down when you take the position in the trade. You're taking the trade you could say betting, whatever, you're entering it through, again, a brokerage account, however you want to do it, as a day trade, or if you're buying the option, it will go under 122 so you can make money. Anywhere under that price, you're up. So again, if you shorted at 122, take 1,000 shares, and it drops to 121.70, what do you want? 30 cents times 1,000 shares, you're up 300 bucks. Okay? That's it. You could be done. You could be out. You could go back to bed. Okay? So again, how do I find shorts? I find shorts by looking to see what stocks are gapping. I'm focusing on gaps. So I may not do the same ticker symbol every day. Maybe I like something, I'm watching it on a regular basis or something. But for the most part, I'm scanning and looking for different stocks every day. Could be news, could be gaps on econ, could have to do with the market, could have to do with the sector, could be an earnings gap. Okay? Now let's talk about the trade that I did do here in the Dow. This was 829. 829 is here. Here was the Dow. Stock closed here, gap down, open, dropped. So this is a day trade. What I qualify as a day trade is a trade on margin. Enter the stock at 122.70. Exited 121.10. Boom. Made $9,600 with 6,000 shares. You can say, oh my God, that's so much. That's a lot of shares. Do less than. You could have taken 1,300 shares. Remember, we were talking about risking $1,000 a day. So here's an example where you could have risked 1,040, done this trade, shorted 1,300 shares, got out. It was more than $1, and made over $2,000. Which, if your goal is $1,000 a day, you're like, okay, I'm doing good this week. I'm doing well. I surpassed my daily goal here. Again, this was 829. And I just want to show you, take it over. I had an early exit on this. This came all the way down, broke 120. So again, I'm doing fast trades in the morning in the first half an hour of the day. I am not holding forever. Okay? Not trying to squeeze every single penny out of my day trades. Any questions here about this? Again, I know not everybody knows how to chat. You have to go up to the new chat box, make a new chat. Then you have to choose my name, Melissa Armo, then you have to type in it. Maybe this is a new feature I wasn't aware of with Zoom, but I did see some people figured it out. So if you cannot figure that out, if it's confusing, you can always email me at melissa@stockswoosh.com. But if you want to ask me a question now, you go up to the new chat box. Anyways, using a 26-point checklist to trade is how I do it. So I get up in the morning and I rate the gap on the daily chart. And I say, wait a minute, let me figure out if this is going to fall. Again, what is shorting? It's a simple concept. It's got to fall. You can't make money if it doesn't fall, if you're short. It's just, you can't. And I don't care if you buy a put or you just short it with shares, it's got to fall. You will not make money unless it drops. So I developed a system where if it rates 20 points or more, I'm saying, woo, this is a high odds of actually falling. And that's good. And then I watch it to enter the trade and do it, get in, get out between 9:30 and 10. Is it the process for short options? I'm doing both. Ulrich, I'm not sure if I'm pronouncing your name right. Let me know if I'm not. I'm doing both is what I'm saying. And I like to do both. Some people only want to do one. Some people only want to do day trades. Some people only want to do options. Some people have a retirement account. They can't short on margin. You don't have margin in a retirement account. You can only go long or buy calls or buy puts. So a put is a short. So if you have a retirement account, you should call where you have it and say, Mr. Broker, can I buy a put? And most will say yes, probably, but you should check. Anyways, you could just open up an account with $2,000 minimum at a retail trader, and an options account, it's a cash account, and you can buy puts. So again, I'm doing both, just so you know. Okay? It's the same strategy. It's the same system. The philosophy behind the 26 points. To find stocks to trade that have, number one, a high probability of directional bias for the entire day, big moves on the day, early confirmation of my bias on the move between 9:30 and 10 a.m. Eastern Time, precise entries with follow-through, and a good risk reward. Now, what do I consider a good risk reward? Again, everyone considers something different. For me, personally, I think if I have 1-to-1 in a day trade. Like if I risk $4,000, I'm trying to make close to 4 grand. If I'm risking in an option, I'm trying to get more than 50%. Like if I'm killing it under 50% return investment, there's a reason. I ran out of time, it's the last day, I'm going into a weekend, the market's against me, something like that. Took too long to go, don't want to hold it till the Friday, something like that, all right? I'm trying to get 100% though, really, in my options too. And so again, anywhere between 50% and 100% is fine. It's fine. But you can't just kill a trade if it's up like 10%. You got to give trades a chance to work. I'd say people back off your risk if you want to get out of it quickly, where you don't even give it a chance to move. Remember, I'm trading momentum. That's the whole point. That's the whole point of trading too, not just to make 3 cents, 5 cents, 10 cents. So again, why trade bearish gaps? I'm looking for large institutional money. Again, the video was a beautiful trade today. We shorted. This bugger here has been watching it for a while. Stock closed here, gap down, open, dropped. This ended up closing down in here, or fell down in here into the close here today. NVIDIA was a short. Again, you could have bought a put, you could have shorted it. It fell, okay? You could have shorted it anywhere in here today and made money. If you went long NVIDIA today, you lost. Again, a red bar depicts selling, okay? So getting back to also what I was saying here, this concept of precision and detail matter. Accuracy counts in trading on all fronts. You need a quality strategy. You need a good risk to reward potential. You need the right entry. You need the correct size. You need the proper exit. Okay, you can't just hold it forever and never get out. That's bad too. Again, you can't get out too soon. Then it's pointless to make money. Your winners aren't going to cover the ones that lose. Being successful in the market takes detail and a certain level of precision. Detail matters. It can make a difference in you making a lot of money one day or losing one day. So you have to learn what to do and when to do it. I cannot stress that enough. Because again, this market, sometimes it's easy. Sometimes it's challenging. But if you stay focused, again, I try to be very focused in the morning. If I stay focused, I can ride the wiggles and jiggles. Because again, if you're going to get shaken out of something, then you either don't understand what you're doing, or you had too much risk on, or something like that. You know, or you just you didn't have a right reason to do the trade. You were in the wrong direction in the first place. So again, a trained eye matters. It's extremely important. It counts when you have to say it and say, wait a minute, this is going to go here. And I'm not making this up in my head. I'm applying the method. It's a method that I teach that people actually learn. It's not like if you watch Kramer's show on TV where Kramer's like, well, I think this, and this about a stock. Okay, well, based on what? I teach a 26-point rating system that I teach actual people just like everyone here, where you can do it yourself. It's not beyond the realm of comprehension. You can actually do it yourself. You can actually apply it yourself. You can actually learn it yourself and do it then for the rest of your life. And that's the point. You know what I'm saying? The point is that you don't need me. Now, while I'm teaching you and I'm a good mentor to people and I'm calling the trades in the room, the point is that you shouldn't have to need me. You know what I'm saying? But anyways, getting back to this NVIDIA, we did this today. And again, a lot of people have had a different opinion about this. I personally have felt that NVIDIA has been lower. We had a beautiful sell-off in this here. We captured this to the downside. And then it had to move up a couple of days ago. And I'm like, I know this is lower. And it's starting to look a lot better now here, and I did short this today. But again, a trained eye helps you through the wiggles and jiggles so you don't get shaken out in trades, okay? How are we doing? Any questions? Again, if you want to ask me a question, you go up to the new chat, pull my name down, Melissa Armo, and then you have to chat in the chat box. I don't know why it's that way for some reason, but that's what you'd have to do. But if you have questions, you can ask me. So again, focus on where the momentum is. Just think about it. Like, again, I'm using an example here to make $1,000 a day, but you can add another zero to that or take away a zero. It's the point of gaining on the momentum of the stock when it's dropping that you just add onto the size to make more money. So again, if you start out, you could do one contract, you could do 100 shares. Learn it. because then once you know how to do it and you build your account, you're adding on the size. Again, it's pinpointing momentum, finding the momentum, focus on the momentum. It's going to be very difficult for you to make money trading over the long haul if you're just trend trading and you're looking for pennies. Momentum to me is $1 or more, 50 to 100% or more. And then there will be trades that are just really, really big trades that just happen to seem like they fall out of the sky, but they don't. It was my knowledge and skill set that helped me figure out that this pick, whatever the pick is going to have a big move, that we get it. It's like you can't push it. You can't pressure it to go whatever it is you want to go. You have to let it ride. I said let it ride, okay? But I'm also saying chunk it out because that's how you put a week together, okay? Fred has a question. There, I see you're typing, Fred. It worked. Here was a nice trade we did. Chewy. We did a put in this, and we did a day trade, and they both worked. Stock close here, gap down. This was, it's hard to believe this was the 10th. So again, stock closed up here, snug as a bug, 42 and change, gap down here, opened at 37, fell off a cliff. Again, we're talking about momentum, we're talking about shorting, we're talking about panic. I don't know why people panicked in Chewy. I don't know why. I don't care. It had earnings. I don't have time to read that nonsense. All I do is look at the chart. And I'm determining ahead of time, before I take the trade, that Chewy is in fact going to go down. Because again, the only way you can make money is if it goes down, if you're shorting. Okay, so here was the trade. Actually, here's the 1 minute. Here's the 1 minute. Stock close here, gap down. We shorted this. I got in and out. I had a very quick trade here where I had an early exit in this because, again, I like to trade in the first 30 minutes and get out. But I want to show you here. Again, I do options and hold them longer, but you could have got out of the option quick, but you would have made more money holding the option a little bit longer. I want to show you here where this came all the way down here around lunchtime, okay? So here was the trade. Again, shorted at 36.65, got out at 35.90. Boom, 75 cents, in and out, done. Again, if you wanted to risk $1,000, 1140, 1,200 shares, you could have made 900 bucks. That's close enough. That's close enough. That's your goal for the day. Done. Out. Again, if you held it, you could have made more. But again, once you get down to where your goal is for the day, you have to be looking to get out. Okay? If this is your goal. Remember, it's never over to the fat lady sings. You could be up money in a trade and it's not yours or in your account till you exit a trade. Again, we talk about exits in the class as well. But I'm going to go back here to the Chewy. Again, got in, got out, done. Boom. Called it a day. Quick trade, money in and out. But I just want to show you that this continued. Okay. Any questions about that? And again, we did a put in Chewy too. I don't think I have this in this webinar, but we did. We did. So it's whatever works for you. Okay. I like to do both. And the reason I like to do both is because I can hold an option overnight. I'm not holding my day trades overnight. Okay. Any questions about that or anything we've been talking about here so far? You doing okay? So how does the time of day fit into it? Time of day fits into it because, again, the morning is the most critical. All right? So for my day trades, I want to be in and out by 10 a.m. In fact, I'm probably not even doing anything if it doesn't set up by 10 a.m. Fred has a question. You have many 1, 2, 5 minute charts open when you trade, and it looks like a subscription service. No, it's not. It's not. It's just your platform. You can set it. You can set up a platform anywhere, wherever broker you're at, Fred. It's not a subscription service. You open up an account at a broker, okay, and you should get charts. I mean, I don't know if you have an account now, but if you don't have an account, you have to open up an account, and then you would set up your charts, okay? And you can set up charts anywhere to look like mine. Again, I'm very focused on the candlesticks, the price action. I don't have a lot of fancy-dancy things because I'm making decisions based on the tape, basically, on the price. But, I mean, looking at charts allows me to trade faster than if I was just reading numbers. But back in the day, you know, that's what people did before the world became electronic trading world, okay? That's what people did. That's what you should be focused on, the price. Again, who's in control? The bulls or the bears? The bulls or the bears? The bulls are in control, they're only going to make money going long. The bears are in control, they're only going to make money shorting. And again, I'm talking about on the day. This isn't about the trend. So again, time of the day, again, is critical. Precision, focus. I like to be done quick so that I don't have to sit at my desk all day. You know, I mean, I'm watching options. Usually I'm checking them around lunch or before the close. But if I'm out of my day trade, 5 minutes, 10 minutes of the morning, I won't sit in my day necessarily for 6.5 hours unless I have a webinar or something to do or I'm teaching a class. I go about my day, do other stuff, go out in the park, come back and check around lunch. Okay? Now, this really depicts here how this, going back to the beginning of July, how the market has made so many new highs. This is a chart of the QQQs. Again, this is a daily. Seems crazy, but we actually did a put on 819. We did the 550 puts that did work in the Qs. I'm going to go back and look at 819 here. It seems unbelievable that we did this trade, but we did it. So stock closed here, gap down. Again, this is the ETF for the overall market. I called the 550 puts. Boom, dropped, boom. It didn't go to 550, but the trade still worked. So because we were in it so early, again, something can be profitable and not even get to the strike. This was called at 1 o'clock on the Tuesday, on this day here, August 19th. It followed through and sold off like a crazy person the next day, and the trade was up. See it? It was $1.60 for one contract. You could have risked $160. Again, I'm trading for a long time. I use an advanced trader risk. It was 134% return on investment. I sold it at $375. What if you wanted to risk again $1,000, $1,280? You could have made $17.20. Again, you took it on one day, got out the next day. Took it the one day, got out the next day. Again, if you look at where we got it, I'm just going to go back here. You see the drop here is substantial. Again, you're seeing the tail, but this opened and was a big fat red. So again, that depicts what? Panic selling. Again, I don't remember the reason the market sold off there. It's neither here nor there. There's all kinds of reasons for all kinds of things. Again, tomorrow afternoon until Thursday, even into Friday, we could have some selling. We could have some panic. Or we might have an exuberant rally. I don't know. Any questions about that? Or anything I just said? Doing okay? Again, you have to go to new chat, then choose my name, Melissa Armo, to chat me. Some of you figured it out. I don't know why this is a new feature. I'll have to find out from support. Anyways, let's talk about the millionaire map. Say you started a course and you're like, I want to do this. I started doing this because I really want to make a lot of money. I don't want to make $100. I don't want to make $500. I don't want to make $1,000. I want to make millions of dollars. Okay, fine. I get it. You're not going to get to that point if you don't have a strategic plan of action how to get there. You need a strategy. You only have as much money as you have in your account right now, small, big, or medium. You have to be realistic. So again, if you're starting out with a large account, you might get to where you want to be, earning the money you want to be faster than somebody with a small account. But you also, there's no guarantee that's the case. I have a lot of people say, well, I need to save up a little bit more, a little bit more, a little bit more, a little bit more. If you save up 300 grand, it's not going to guarantee that you're going to do well if you start to trade and have no idea what you're doing. If you don't have a system, if you don't have a strategy, if you don't have a set method to follow that has a high win ratio, you're not going to be successful no matter how much money you have. So learning is equally as important as the cash you have at risk, because you can always build a small account into a big account to grow it to $1 million or more. If you have a large account or several $100,000 and want to take big size, you can blow it all up and very quickly, and you'll never reach your goals then if you don't know what to do or you're making a lot of mistakes. Make sense? Um, Robin, they're everywhere. They're literally everywhere. That's finding gaps is easy. It's predicting the ones that are going to move in the direction of the gap or if they're going to reverse. That's the criteria that I look at, because you can't short every bearish gap, and you can't short every bullish gap, and you can't go long every bullish gap, and you can't short every bullish gap. So it's easy to find gaps. There's thousands and thousands and thousands every day. It's figuring out which one's the good one that's going to have a good move and then go in the direction of the gap, which is what I focus on. Dan is saying about the prop firm. There are a lot of places out there. You must do your due diligence to go find a place. That place sold out. They're gone, Dan. Now, you were going to trade options, I think, the last time I talked to you. You can open an options account anywhere at a retail broker in the U.S. But a lot of prop places now are selling to other larger companies, or going out of business because they just don't have the volume, because people are now opening up accounts at regular retail brokers now like E-Trade and Schwab because they don't charge commissions or fees. So a lot of these prop places back in the day, and even the ones that are around, charge fees. People don't want to pay fees. They don't want to pay commissions. They don't want to pay platform fees. So the answer is no, Dan. But I thought you were going to do options anyways. Because again, you wouldn't, there's no prop place for options. You just open up an options account at a retail broker. Any other questions? I was going to say something else too and I forget. Shoot, what were we talking about? You got to check into these prop places, I'm telling you. You got to know where you're sending your money. Like, I'm serious. Do you know what I'm saying? You go to a place that's SIPC insured, you know your money's safe. That's just, that's my 2 cents, okay? You want to keep your capital safe. Now, how many gaps do we get per week? During each quarterly earnings season, we can have 3 or 5 a day, okay? Doesn't mean I'm doing 5 trades a day, all right? I'm trying to find the best one. During non-earnings season, we could have 3 to 5 a week. Like it's like I'm really looking hard to find 1 a day in non-earnings season. Now, I think this is a very interesting time, 2024, because of the election cycle, in 2025 because of the tariffs and the Fed issue, where we've just it's just been a busy time to trade. I mean, if I rewind back, 3 years ago, 4 years ago, of course, 5 years ago was COVID. We were busy all year during 2020 with COVID. It was a profitable time to trade. But in general, in normal trading, I don't even know what normal is anymore, but say a normal year, you're looking in non-earning season 1 a day, or it could be 3 to 5 that you'd have that would rate good. Again, whether you do all 5 or more is up to you. I like to do 1 trade at a time. I think it's easier to follow me in the room. It's easier for me to manage with the size I'm taking. And again, I'm trying to get in and out of trades very quickly. Okay. Now, I may do more than 1 option, but again, I'm not getting in and out of my options in 3 minutes, 2 minutes, 5 minutes. So I can put the trade on in an option and let it play out. But there's plenty of gaps. It's finding and qualifying and finding the good gaps. Not every gap is a golden gap. That's the point. That's why I had to develop the system in the first place. You know what I'm saying? And again, a lot of stuff out there in gaps is just crappy. A quality gap is one that rates high enough to trade based on the 26-point rating system. And again, like I was saying, you need a plan of action to make money quickly. Quick. Stick it into piggy bank. Chunk it out. Chunk it out means stick it in the bank and get out. Take it, book it, get the move, get out. Again, get the move, get out. That's the point. That's the point of it. You're not going to make $1 million in 1 trade. You're not going to make all the money back you ever lost in the market before you met me in 1 week or 1 day or 1 trade. That's not realistic, okay? It's a process where you're doing it and you're learning it and you're going through and you're just getting good at it and you're booking money and chunking along the way to get to your goals. And as you get to your goals, you get there. Again, some of you may be able to start right away and risk $1,000 per trade right away, but I'm talking to people that can't. Do you know what I'm saying? Some people might be able to risk more right away. But you need a business plan. Again, take what you have, the starting capital you have, and go from there and get organized about how you're going to do it. it really, once you start doing it and once you start getting green and having a series of green days, I think you'll just be on your way. I think a lot of people are just like, oh my god, this is so overwhelming. I don't know how I'm going to get there. That's why I'm saying think about it on a daily basis. Think about it on a weekly basis. Break it down. Break it down, 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 because that's going to make it a lot better for you to handle it mentally to get to the goals without, putting the cart before the horse kind of thing. So it's the right risk to reward trades equals results. It's important to have results. It's, we're doing this to make money. That's what you need. That's the reason we do it. And you have to protect your capital. So you have to be thoughtful about the money that you risk, and you have to be consistent with your risk. So again, what is a good risk to reward payout? Like I said, in a day trade, 1 to 1. Okay? And in an option, I think 50% to 100% is good. So, again, 1 to 3 on the low end, 4 to 6 in the middle, 8 to 10 in the high end. And I've had some trades that have been like that. I'm trying to get $1 a day in each day trade. I'm saying that on average, we've done some cheap stocks that maybe 50, 60 cents is good. And then there's some very expensive stocks we've done where I'm looking for $3 or more if it's very expensive, and it could go, $15, $20 on a day. But again, this is on average, and that's why you have to have in your mind per trade, take the amount you're risking and try to turn it over, okay? So I'm using $1,000 as an average of what you should be risking to hit these numbers. And if you get really good and you're doing really good, maybe you can risk less, 800, to hit the number. But obviously you want to risk more if you're doing well, not less. So again, think about what I said here about breaking it down, because you can understand, even if you're new or have a small account. When I first started trading, I was only risking $150 a trade. First of all, I didn't know what I was doing. Second of all, I was trying to figure out this system. And then I thought, well, if I lost $150 in a trade, it wasn't that big of a deal. And if I made money and had really good trades, which I often did, I could make $500 in one trade. So, and I was doing that. So again, 150 wasn't like a deal breaker. I never it wasn't like, oh my god, it's the end of the world if I lose in 2 trades. It was $300. So for a long, 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 long time, my day trade risk was $150 while I was figuring the system out. And so that should not be a scary amount of money for anybody. I get that everybody wants to start big, but if you don't have a big account, you can't. You can't. And like I said, a lot of day traders are losing. So the idea of just even making $750 a week is actually pretty good. It's actually pretty good. Again, look at it over the long haul. But I can teach you how to short. I've been doing this for so long. I'm really an expert in shorting. It's kind of interesting, again, that I've been doing this in most of the life I've traded. The market's been bullish. There's been times when the market's been bearish, though, over the 17 years I've traded. And those are very fruitful times. And I'm poised to be ready to do that whenever it happens, whenever the next time it happens, whether it's this year, next year, or who knows, in the future. But rest assured, it will happen where the market will sell off again. The market will not keep going up straight forever. Then all the people that have been buying every dip and going long are going to lose. People lose in shorts when something falls very fast, and that's why we make money fast shorting. Do you get it? So the reason that I make money very fast in shorts very quickly is because of panic. Because the people that are up are panicking. So somebody can be up, in their account, 50 grand for the last 6 months going long different stocks in the market. And they could lose that $50,000 in a day. Trust me, I've heard of horror stories from people. Horror stories. And I know just from looking at stocks and seeing what's going on. And playing the opposite side of people. Do you understand? Playing the opposite side. And it's very difficult, when people are in a habit of going long a stock, and I'm just making up a stock, like say it's Apple, and again, Apple's been strong. It's been strong and had a move today. If people are going long Apple, long Apple, long Apple, long Apple, it's hard for people to let go. It's hard for people to let go and then think about shorting it. But you can't be so stuck on your bias that you don't want to do a short. Do you know what I'm saying? Because if the stock is falling, if the market's falling, you're going to lose. If you're in the wrong direction, that's my whole point. So I teach a class, which is my system that I developed for nobody else but me. I developed it for me. Which is probably the reason it's so good. And then I ended up deciding to start a business and teach it. But it wasn't like I started out developing my 26 points for anyone but me. In fact, I was cleaning the other day, organizing some crates in my office, and found my original printed up point sheets, which are all, pretty butchered up sheets right now, but it's kind of funny, like, thinking back. It was a long time ago, but I still have all my original notes. Isn't that funny? The Golden Gap system is a 26-point professional bearish gap rating system. The purpose of the system is to help you to evaluate which gap to trade each morning using a checklist. And this is what I do. The Golden Gap course teaches a 26-point rating system to find the best stock to trade each day. The course also teaches you how to enter and exit the trade stock on the day to get good risk-to-reward trades. The course teaches price analysis and technical analysis on an advanced level. The course teaches a more proficient way to read support and resistance in the right direction. And the course teaches you to focus on one strategy in a detailed manner so you can become a good trader, which again was what I was talking about at the beginning about having a focus. So my focus is at 26 points in gaps, and I focus on bearish gaps. If I don't find any bearish gaps that rank 20 points or more, then I'll flip to the bulls, and then I'll look for a bullish gap. But I'm trying to find a short first. And this is what I focus on in the morning when I'm trying to figure it all out, and then I make a determination if I can find anything or not. So the whole philosophy behind the system is to analyze a large time frame to make the trend decision on the directional bias for the gap. All large traders of every kind look at large time frames to make decisions, particularly institutional traders. To make entry decisions and exit decisions based on a small time frame, which is the 1-minute chart, which is a high degree of focus and accuracy. Again, I'm entering in the 1. Okay, using the daily chart to make the decision for the stock pick allows for accuracy in the direction, okay, and using the 1-minute chart allows for good risk-to-reward trades with accuracy. So again, I've been doing this for a long time, and every once in a while I get a big trade. Whenever it happens, you never know. I mean, you got to be in it to win it. You got to be trading with me to get the big trades. But it's not luck when that happens to me. It's about skill. It's a skill set, and I really truly believe the success in the market is not about luck. It's about skill. To be a successful trader, it's not about luck. It's a skill-based career. All highly paid careers are skill-based. Physicians, musicians, attorneys, you need to have the right skills and knowledge in order to succeed. The interesting thing about trading is that people either, number one, don't realize how important the right knowledge and skill set is before they risk money in a trade. This is the case of most people out there that trade, even now today. Even now today, and since the beginning of time, that will probably always be the case. Fast forward 50 years from now, people risk money and they have no skills or knowledge of why they're even doing the trade. They're following people blindly, or they read something in a newsletter and do it. Or number two, they think they have the right knowledge but really don't. And that is also happening right now. We talked about this the other day in the room, because a lot of people think they're geniuses now because they're making money, because they're just going along the market, or stocks that are rallying with the market making new highs. And they think that they're geniuses now, and it's not going to last. But they're just trend trading. And it's just working right now because the market's making new highs. It's been showing a lot of strength, but it's not going to last forever. So again, is the class beginner or advanced? I think it's advanced. Again, you get your money's worth with me. My class is $7,000. Now you're like, oh my God, I'm a beginner. Then you have to take notes. You learn. Again, we start from the beginning. I go over some very basic things. Saturday morning, the first day, I start the class with some basic things. But overall, the class is an advanced class. I think I'm a good teacher. I think I explain things very, very well. But it is an advanced class where you just have to kind of jump in and throw yourself into it, take notes, ask me questions. I mean, I'm here to answer your questions. Actually, does anybody have any questions right now as I'm talking here? How are we doing? We doing good? So there's more than one step of the ladder for most people's journey. I think that's true for a lot of things when you have goals. Like when I started in television, I wasn't like, Fox wasn't my first appearance. Actually, my first appearance was in Pix 11, which is a local New York station. I didn't start on Fox. So again, there's more than one step on the rung when you're going up the ladder to how you get to the place you want to get to. And there's it's a different journey for everyone. Nobody wakes up and is born tomorrow and starts to trade their very first trade and makes all kinds of money and then never looks back. That just doesn't happen. So again, you have to be focused. You also have to be positive. You have to be optimistic. You're like, okay, I'm going to take 5 steps forward. I might have to take 1 step back. then that's just going to motivate me to move ahead even farther. Okay, some days when I have a bad trade or a bad day, or if I'm having a tough day, or for whatever reason I don't get the market right or something, it's almost like after that a switch goes on, like in me, like it flips a switch, because I'm such a fighter and I hate to lose. That all of a sudden then I move forward and I come back even stronger, and then I make more money the next day, or more money the next week, or more money the next month. It's just, that's just, I don't know, it's just something about my personality. I'm not saying you have to be like that, but I'm saying that there's a steps and there's a process. Okay, Eric's doing good. Martin has a question. Oh, you're listening. Martin, I see your Pink Floyd sign. That's funny. Martin's a Pink Floyd fan. I haven't listened to Pink Floyd in like 100 years. At some point, you do need to get on the right path if you want to make it, though. At some point, you have to get on the right path. It's like, you know, if you're in a habit, say you're in a bad habit or something, either staying up late, or you're getting up late, or you're drinking, or you're smoking, or you're, you know, or you're eating cakes, cookies, and pies, and you got to go on a diet. At some point, you're like, okay, I know I have to start figuring out my size. I know I have to get a strategy. I know I've been wishy-washy about trading. I know I have to do Melissa's class someday because I'm not doing well and I see what she's doing. At some point, like, you just have to face the music kind of thing, where you're like, oh, I've got to get in an exercise program. You know, I mean, again, you know it. Like, your intuition tells you. Again, generally, people in general are pretty self-aware. They may try to pretend that they're not listening to their intuition, but in general, I think when many people trade and they're losing money and they're going through the process, I think people realize that they're kind of gambling. And then they get mad at themselves, upset with themselves. Don't. You know what you need to do. You know you have to get more organized. You know you have to get more realistic. You know you have to get grounded. You know these things. You have to be aware of what it takes to make it, instead of living in a fantasy world that you're not going to realize. Do you know what I'm saying? Where you're going to just have this one huge trade that's going to make all the money back that you ever lost, and you don't have to do any work, you don't have to use your brain or do any thinking, or you're going to pay $1,000 for a class and learn how to make $1 million. That's not realistic either. So again, good information, quality programming does cost money and time and effort, but the beautiful thing is you can learn it in a weekend, what it took me 3 years to figure out. And then you can follow me in the room. So be honest and ask yourself, what is your mindset? We're living in a time now where, I mean, especially the last week, 9/11 and the assassination of Charlie Kirk, you can turn on the TV, the political mindset, even the last year, like, whew, you could be like, why did I even turn that news on? You want to know what's going on in the world. You want to be informed. But man, sometimes you can go into that negative headspace. And so you kind of have to pull yourself away from that a bit to be positive, because we have to be responsible for our own lives. We have to be responsible for our own finances, and we need to stay in a positive mental state for that to happen. Do you know what I'm saying? So again, be honest with yourself and say, do I really feel positive about trading? Like, am I okay risking this money? Do I really want to do this? Is this really what I want to do? And hopefully you'll say, yeah, I really do want to do it. Or maybe you'll say no. It will be like, no, I don't really want to do it. It scares the crap out of me. I don't know what I'm doing. If you're honest with yourself, though, it's going to help you make a decision. Again, if you're like, I don't know what I'm doing, I have no idea, I'm scared, I need help. Again, that's where then you realize also you need a program. And you need a mentor. You know what I mean? Because a lot of times people, they think they're piggybacking on trades with other people in blind trading rooms, but they're really trading scared because they don't understand what the person is doing that they're following, because they don't know anything about their structure or system, or maybe they don't even have a system. Anyways, do a reset to move forward. If you're in a negative mindset, change of seasons is a good time to do that. Again, it's the first official day of fall this weekend. And it's a good time. It's been hot here in New York. It's been hot here in Manhattan, but it's kind of funny. About 3-4 weeks ago, we had some chilly weather. It was beautiful. It felt like fall. Now it's hot again, but fall is coming, and the air seasons will change, and it's a good time to do a reset. Do like a refresh. Do a little house refresh. Do a little house refresh in your mind to reset your mind. Okay, because again, your mindset is very, very important. If you take a trade and you lose, you can always come back on the day if your mindset is there and you're focused. I know that about myself. If you take a trade and you lose and you go berserko, you're never going to be able to come back on the day. And you could take that losing, mentality into the next day and the next day and the next week and the next month and the next year. And you know what? That's what a lot of people do. That's exactly what they do. Okay? So you've got to put your mindset in a positive light and a positive framework. So be positive and think like a successful person. And don't let anything stand in your way of success. Don't not trade because you say you don't have enough money. You can start slow with small size. There's nothing to be ashamed about with that. There's nothing to be ashamed about taking one contract. Again, when I started trading on a $150 risk, okay? And again, go slow. Go slow. Take your time. You're doing this for yourself because hopefully you want to advance your future and your knowledge base, and then also, again, make money. I mean, that's the whole reason we're doing this. So it's totally, totally doable to do it, but you have to chunk it out. Break it down per week, per month. Like I was saying, it makes it doable. And empower yourself today. So the Golden Gap course is a system, a complete system to use to trade. You learn all the pieces of the puzzle. You learn the entries. You learn the exits, the targets. And you learn the 26 points in the class, which I was talking about earlier. So this is a class that I teach, which is my system. It's the full system. I don't hold anything back. And I teach it once a month. The class is online. You can be anywhere in the world and take it. The class is this weekend for September 20th and 21st. So I don't have that many more classes left this year. It's hard to believe. It's September, October, November, December, that's it. And really, if you want to trade for earnings season, which starts at the beginning of October, this is the class that you'd want to do to get in and start trading. Learn it, take notes, go through the process, start trading small, and then maybe by earnings season in October, you're ready to rock and roll, hopefully. So the class is a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. Again, the class is online. It's this weekend, 9 to 5 Eastern time. I think the marathon weekend is when we do the time zone change. It's in November 2nd, I think, till November. So we're still in Eastern time zone here, 9 to 5. Cost of the class is $6,999. And again, it's a bearish system. If you want to sign up, you will email me for the forms at melissa@thestockswoosh.com. And again, people love the room. They love the room because I'm calling the trades live in the room. But I am doing a welcome fall special if you're interested. You have to sign up by Friday. 5 p.m. is a deadline. I really no later than that to get you in for the class this weekend. Friday the 19th. If you sign up for the Golden Gap course by Friday, you'll get the trading room, market report, and option subscription free through the end of next year, which is a huge amount of time and should help people not feel so rushed to trade. But think about everything I said today, having your attitude, having the education right, taking it step by step, building it up. And again, earnings season starts in October, but it's one of these things where I think we will have a lot to do just because of the fact that we're going to have volatility with the tariffs too. Don't forget the tariffs. A tariff deadline with China is coming up too. Any questions from anyone about anything at all? Any questions about the class? Any questions about gaps? Any questions whatsoever before I let everybody go? We went a little bit after. Thank you for staying. I know some of you came in late. Dan, I hope you get to join this year sometime. Michael, Martin, you're already signed up. I see some new faces. I see some old faces. Well, tomorrow's the Fed meeting. I didn't look and see what. I don't know what we're going to have tomorrow. The market might wait to move until 2 p.m. Actually. If you have questions, you could always email me here. if you couldn't figure out how to chat. Melissa at thestockswoosh.com. If you have questions, if you want to sign up for the class, you can email me there or you can call me. I don't bite. Here's the phone number. Wonderful. All right, have a great evening, everyone. You're welcome.